episode of the Earnings All Stars because earnings season is still going on. Even though most of the Magnificent Seven is now reported, everybody except NVIDIA, we still have hundreds, if not thousands, of companies still to go. Mostly the mid caps and the small caps are coming now, but we'll have a smattering of the large caps in there as well. So who should you be watching this week? I picked out 5 charts. These are just the more interesting names. Some of them were big winners during the pandemic and have now pulled back. But I thought we'd take a look at some of these because it's kind of telling us where the stock market is going here as we head into the end of the year. So what are they? Let's take a look. Okay, the first one out of the gate is one I've talked about in the past, and it's Twilio, ticker TWLO. This was a big winner, as you can see, during the pandemic, the huge gain with the stock, but it's also a winner on the earnings side. No misses. All these long green arrows are beats, and they're long. Look at this one, 86%. We had one last quarter, 135%. This one, 344%. But as you can see, the stock doesn't really care. It's still pretty depressed. 2 years now, it's down 83%. Although year to date, it's actually up, but just 8.7%. It's now trading with a PE of 31. So I wouldn't call it dirt cheap, but it is more affordable than maybe it has been in the past. But this is one a lot of people are going to be watching this week, not probably for the earnings, but just to see if the stock can get any momentum to break out of its channel here. Okay, the next company is a little bit different, although the chart is still looking kind of depressed here, and that's kind of the problem we have this earnings season, right? So it's Digital Turbine, ticker APPS. I follow this one pretty closely, at least just on the technical level, because I used to own it in the insider trader a couple of years ago, but you can see it's had the 3 misses in a row for this year, and the shares keep sinking. They did hit a new low this year and bounced kind of off of that. 2 years now, the shares are down 92.5%. PE is just 8.1 because Digital Turbine does make money, but it is in the digital advertising space. So that's been really challenged as the economy has slowed here. But again, they do have a PE, so they do have positive earnings. Year to date, so far, this is what makes it different than Twilio. It is down about 67% year to date. And you can see there right at the end, it's still kind of trending lower. Have we bottomed? Unclear. But this is one I'm going to be watching to see if things are improving on the business side, because that will hopefully lead to improvement on the stock side. So that's Digital Turbine. APPS is the ticker on that one. Then we're going to kind of stay in the techie realm, but tech and entertainment with Sony, one of the big caps that is often overlooked. But look at its earnings surprise track record. It's very solid. Just this one miss here in May 2022, just 6.1%. And then we had one right when the pandemic hit. That was one of the pandemic quarters, missed by 70%. But remember, Sony has not just the electronic side with the TVs, and also they're big on the cameras still, and especially in smartphones, but they're also big on the entertainment side. So if no one was going to the movie theaters, that's really going to hit their bottom line. But Sony is one of the few that never developed its own streaming service. So there is no Sony streaming. They have sold their content to the other streamers. I love that because they don't have to sit there and try to come up with new shows endlessly. They still have their movies for the theater. So it's a win-win for Sony. They also own the largest music catalog, or one of them, out there on the market. So that's a big plus for me too. And they have the gaming side. So quite a collection of companies with Sony. And you can see they put together some big beats. The last one was 36%. The one before that was 39%, but the shares are in this kind of stagnant area, not breaking out, but haven't completely broken down. So year to date, up 13.7% over the 2-year stack, still down 29%. It's trading with a PE of 15.8, making it among the cheaper of these big kind of tech conglomerate type companies. So that's Sony, SONY. Then we're going to switch over to one of the consumer brands, Tapestry, ticker TPR. This owns Coach and Kate Spade. They're trying to buy Capri Holdings, but the FTC is now asking for a little more information on that merger. So it hasn't gone through yet, and we'll see if it does. But they have an excellent earnings surprise track record too. They had this one miss back in 2019. Then they had the miss right when the pandemic hit. This was, again, 68% miss. And then they had a surprise one, but barely, just 1% miss last quarter. Otherwise, they are very consistent. But the shares have really tumbled here in the last couple of months. Year to date now, down 27.9%. Shares cheaper than ever with a PE of 6.8. It has been a value stock for many years, but you can see once it got the boom off of the pandemic lows, it's just been in this narrow trading range for about 3 years now, and now it's broken down. So will we see a breakup again here? I think people are waiting to see if the Capri Holdings deal goes through. They do pay a dividend. They've always been shareholder friendly, and it's yielding 5% now. So that's pretty juicy. We'll see what they say. And also one thing to keep an eye on is China. Tapestry is big in China. What is happening with the consumer there? We've seen a lot of weakness, so that could be in play here. So TPR is that ticker. Then we're going to wrap it up with another consumer name that we followed here on the Earnings All-Stars many times, and it's Yeti, ticker YETI. This one too, huge pandemic winner. Now it too has sold off. 2 years down 61%. Year to date, though, like a lot of these, it came down. It recovered a little bit, but now it's in this narrow trading range, and it's up just 1.8% so far year to date. But what is the earnings looking like? So they were an earnings all-star with no misses there, as you can see, going up until 2022. We finally had one here, and it was a small one, just 7%. And then we had another one this year, but this is even smaller, just 1.3%. And then they have put together some nicer beats, 21 and what's this one, 20. So that's not the problem. And it looks like it did get a little bit of a boost off this earnings beat. We had a little bit of rally, but it has given it up in this recent pullback. It's trading at 19 times now, so it's not crazy on the valuation. And so I'm liking that part of it. But what's the catalyst here? I feel like a lot of these stocks either have to break up or break down. So we're waiting on Yeti, ticker YETI. And so you can see this is quite an eclectic mix of stocks here that are in all different industries, but a lot of them have somewhat of the same type of chart. So they were big pandemic winners. They sold off last year. A few have gotten okay rallies this year, but not NVIDIA type rallies off of last year's lows. And now they're just kind of treading water, waiting for either some kind of catalyst or some worse news to get even cheaper. So I would be keeping a lot of these on your watch list. Tune in for the conference calls and see what happens. But I'm going to be tuning into all of these and more throughout earnings season. We still have a little bit more to go, and I'll be bringing you a few more charts before we wind down. But be sure to get them at Zacks.com/YouTube. That's where you can get all of our YouTube videos. But be sure to be there because I'll be back next week with some more earnings charts.